Hello, my name is Joe Richter. I'm a real estate broker and an associate broker with Keller Williams Realty. I am licensed in California and Oregon. I prepare monthly reports that look at the monthly market trends in 14 communities and market segments I call the Orange County Lifestyle Artery. This artery runs from Newport to Ladera through Irvine and Trabuco Canyon. These reports are available on our website at joe-richter.com under the navigation link Monthly Updates. Each report takes a focused look at a specific community or neighborhood. The goals are 1. To establish and monitor home values, 2. To define the market type as either a seller or buyer's market, and 3. To set up reasonable expectation for days on market, the period from listing to getting an acceptable offer and a signed contract.
This report focuses on Ladera Ranch condos and townhomes. It covers a period from January 1st, 2020 through May 24th, 2020. The headline for the month: new listings continue to slide, inventory remains low. The blue line in the new listing graph shows a slow decline in new listings. This obviously does not reflect normal activity for the Ladera Ranch condo market. The blue line in the inventory graph shows inventory is low but steady. Without fail, when we do listing consultations, sellers want to know what type of market is it. Well, currently, the Ladera condo market is a seller's market with 9/10 of a month of inventory. Notice that the prior 2 months were at the same levels, and the first 2 months of the year were even lower. The Ladera Ranch condo market is by far the most desirable market that we see in the 14 communities that we report on, and this is primarily due to its price points from about $450,000 to about $650,000. Chapman University defined a buyer's market in Southern California as being 3.5 months or more of inventory. Monitoring the active listings provides insight into trends such as home values and inventory levels. There are currently 12 active listings. There were 13 in our report 30 days ago, and there were 14 in our report 60 days ago. There were 34 new listings over the past 90 days. 11 of those new listings are still on the market. There were 11 new listings in May during the stay-at-home order. There are 3 essential steps in the buying and selling process. New listings reflect a willing seller. Contracts written reflect a willing buyer. And the closing represents the execution of the technical aspects of the purchase contract by the buyer with the cooperation of the lender. So far, compared to 2019, new listings in 2020 are down 31%, contracts written are down 5%, and closings are up 14%. New listings indicate where the market may be going from the perspective of sellers. As noted earlier, new listings are down 31%. The Ladera condo market slowed in February, as seen in the blue line in the graph. Pay attention to this graph over the next 60 days. As we see that blue line start to trend upward, we should be seeing ourselves coming out of this stagnant period. On the positive side, 2020 started off very strong in Ladera Ranch and for the rest of the county. There were plenty of willing sellers and willing and qualified buyers. And perhaps most importantly, Fannie Mae is forecasting very strong third and fourth quarters. Contracts written are down 5% compared to 2019. Contracts will have to slide over the next couple of months because new listings have slowed down. Closings are up so far this year by 14%. This is due to the best ever first 3 months of the year. Because they follow contracts written by 35 to 40 days, the blue line will remain flat for a month or two. We are expecting them to flatten out and start to improve by July, August at the latest. Home values are understandably the most important subject sellers want to discuss. Home values are always established by the market. The buyers and economic conditions, not the sellers, establish the market. The last graph in this report demonstrates this market value concept. Please be sure to watch it. In Ladera, condo values are running up 1.65%, which is pretty good. It's not the best that we're seeing, but it's not the worst. It's slightly above average. The average list price for current listings is $563,000. The range of prices in the active listings is from $462,000 to $649,000. Ninety-day closing activity is a very important trend to monitor. Recent closings are used as a primary metric to determine pricing in appraisals and CMAs. Depending on the amount of information available, the number of closed transactions, a look-back period of 90 to 180 days is typically used to obtain sufficient data to make an estimate. We use a 90-day look-back period in all of our reports because our markets are robust, and the shorter period reduces the distortion seasonality can have on the data. For instance, looking back 6 months would mean we would have November and December data in our assumptions, and what happened last November and December is totally irrelevant to what's happening in the market today. Over the past 90 days, 34 homes have closed. 12 of those homes sold closed below revised asking price. 6 homes sold at revised asking price, and 16 homes sold above revised asking price. Be sure to watch that last chart to see this in action. This is a normal data distribution for the Ladera condo market. Days on market is the time from activating the listing on the MLS to getting an offer accepted and a purchase contract signed. As listing brokers, we always advise in a normal market the DOM time would be 30 to 45 days and strongly suggest pricing accordingly. The DOM for all active listings is 41 days. It was 42 days in our last report at the end of April. DOM was 33 days at the end of March. We should note that the DOM for the closing so far this year is 30 days. This indicates that the homes that have sold and closed earlier this year were doing it in less time. Inventory levels are the primary determining factor in defining a market type as either a seller or buyer's market. Chapman University defines a buyer's market here in Southern California as being 3.5 months or more of inventory. The current inventory level of 0.9 of a month has been the inventory level for 3 months in a row. There are 3 measures of inventory that we monitor to forecast shifts in the market. The first is the change in inventory from a point 90 days ago. The current inventory increased 33% from 90 days ago. The second is year-over-year changes in inventory levels. This aids us in understanding how normal the current trend might be. Today, year-over-year inventory levels are down 59%. And we may have mentioned seasonality in an earlier conversation. The third metric is a cross-check on seasonality. We look at the month-to-month comparison. The current month, May 2020, is down 64% compared to May of 2019. By now you recognize that we crunch a lot of data. We get that data in these reports direct from the MLS. We have a whole bunch of saved searches so that we are always comparing the same data set month to month, day to day, hour to hour when necessary. We put the raw data into our own proprietary statistical models. No one else has this presentation. We have also created links for each community on our website to this data so that you can see the public-facing information in our reports. This map and the listing thumbnails that follow are the public-facing information of the data we have presented. These listing thumbnails provide quick summaries of the data, but you can click on any one of the thumbnails and get the underlying public-facing information that's available on the MLS. This information is up to date to the second. You can see it here faster than you can see it on Zillow, Redfin, or any place else. You can access this data at our website, joe-richter.com, under a navigation link, Predefined Community Listings. The drop-down arrow will show a drop-down list of the communities our sellers and buyers have asked us to provide quick access to. These are live, dynamic links with up to the second accuracy. The raw data we get is sorted into tables so we can make our analysis. This table shows the current active listings. Note, we also have on the lower right-hand side our outlier tables to determine which of the data may be outside the normal range of information. This table and the next show the closings so far this year. As the year progresses and the number of closings that accumulate, we will have to show this data probably in 2 or 3 tables. On our report, it is a single table. And finally, here is the last bit of detail. This chart shows the value range of the closings. The red dots represent the close price. The gray dots represent the original list price of the same transaction. If you recall, earlier in our 90-day closing trends, we had some homes closing below, at, or above. Well, this is represented here by the gray dots. Notice most of the gray dots are above the red dot, indicating a price reduction either during listing or as part of negotiation. However, there are plenty of gray dots below the red dots, which shows a price increase. This is typical when a well-priced home draws competitive offers. The buyers end up offering more than the original list price. Buyers and economic conditions set market value.
In closing, we would like to say thank you for patiently listening. We have tried to make this a high-level explanation of how the market is evolving. If you need help with your real estate needs or just have questions about forbearance or prices or DOM, anything at all, please contact me. The team I work with would love to be of service. Again, thank you very much.